Hi, I'm Pat Keon, a Senior Research Analyst with Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, February 12th. We'll start this week's report by taking a quick look at the market activity. The major equity indices all posted solid gains for the fund flows trading week as the NASDAQ Composite, the S&P 500, and the Dow Jones Industrial Average appreciated 2.3%, 1.3%, and 0.9% respectively. For the year to date, the largest positive return also belongs to the NASDAQ at 8.4%, while the S&P 500 and the Dow are up 4.6% and 3.6% this year. All these indices have recorded positive returns in 5 of the 6 trading weeks this year. The positive results this week were influenced by optimism that the coronavirus outbreak was somewhat under control and its negative economic impact would not be as great as originally feared. Other positive economic news included the U.S. unemployment claims dropping to the lowest level in 9 months, as well as the Federal Reserve reporting to Congress that it believes the probability of a recession has declined. We'll turn our attention back to the week's fund flows results now. We'll start by taking a look at our fund macro groups. For the week, equity mutual funds suffered net outflows of $4 billion, while the remainder of the fund asset groups took in net new money. Money market funds, taxable bond funds, and muni bond funds had positive net flows of $7.1 billion, $5.4 billion, and $1.9 billion respectively. We'll now explore the changes in each one of these asset groups more closely. We'll start with our equity mutual fund group. The $4 billion net negative flow was the group's 7th straight weekly net outflow. Domestic equity funds were responsible for the majority of the net outflows as they had $3.3 billion leave, while non-domestic equity funds had net outflows of right around $690 million. Large cap core funds had the largest net negative flow among the domestic equity peer groups at $631 million, while international multi-cap value funds had net outflows of $728 million on the non-domestic equity fund side of things. We'll move on now to our taxable bond ETF group, our equity ETF group now. Equity ETFs had net inflows last week as they took in $8.8 billion of net new money. It was the group's 2nd straight weekly net inflow. The largest individual positive net flows belong to the SPDR S&P 500 and the Invesco QQQ, which took in $4.2 billion and $1.7 billion respectively. The Invesco Russell 1000 Dynamic Multi-Factor ETF had the largest net outflow at just about $930 million. We'll move on now, look at our taxable bond fund groups, starting with mutual funds. Taxable bond mutual funds took in $5.4 billion of net new money to run their streak of weekly net inflows to 6. The Core Plus bond funds and core bond funds peer groups paced the positive net flows with increases of $1.3 billion and $1.5 billion respectively. Moving on, we'll look at taxable bond ETFs. This group also had net inflows. They took in $6.3 billion last week. The largest individual positive net flows belong to the SPDR Bloomberg Barclays High Yield Bond ETF and the iShares Core U.S. Aggregate Bond ETF, which had net inflows of $791 million and $788 million respectively. The largest net outflow among the fund asset group belonged to the iShares 7 to 10 year Treasury Bond ETF, which saw just about $470 million leave their coffers. We'll move on now and take a look at our muni bond fund group, which ran a streak of weekly net inflows to 58. The asset group took in $1.9 billion in net new money for the week. As usual, the asset group was led higher by its national muni peer groups as opposed to the single state muni peer groups, with the high yield muni debt and the general muni debt fund groups taking in $588 and $522 million respectively. Our last group to review is money market funds. Money market funds had net inflows of $7.1 billion for the week. The majority of this asset group's peer groups saw their coffers grow, with the largest net inflows belonging to institutional money market funds and institutional U.S. government money market funds at $5.3 billion and $3 billion respectively. The only peer group which saw money leave was the institutional U.S. Treasury money market funds group, which had net outflows of $2.7 billion for the week. Well, that wraps up this week's report. If you'd like to take a closer look at the fund flows data for yourself, please go to our website at www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.